Hi, Warriors. We'll see if we get some disinflationary news this morning. Keep the yields moving lower. Hi, AJ. Hi, Alexander, Mike, Steve, Len. Hi, Ryan. RJP, James, Brand, Cayman. How are you? Munir, Blake's here. Galaxy, how are you, buddy? Okay. Yen's up a bit today. Let's see. Euro's comatose. Here we go. So, Brian, maybe I'll start off with you. What are you expecting today? What would be a good number? Good morning.
Morning, mate.
How are you?
What indeed would be a good number? We're in that situation where good might be bad later, bad might be good later, or bad might be bad forever.
Yeah.
So we got this GDP number coming out. We had a bit of a chat on the Flow Show about it. It really could be up in the air. The expectations are for negative numbers to positive numbers. The mean expectation was for, well, depending on who you look at, it's either around a minus 0.2 or plus 0.2 GDP number. But all this trade and front running tariffs comes into the mix.
Right.
The big amount of imports is predominantly usually a negative for GDP, but it depends on how those imports have been used. If producers have imported and are stockpiling, that's a negative. If producers have imported, produced and sold it to their customers who are stockpiling, that's a positive because it's a final goods or services, so it's counted as a positive in GDP. So who knows, mate?
Yeah, it's a who knows.
It's a who knows.
We were talking about this yesterday, Ryan, and it looks like it turned off this moving average. And this kind of looks like consolidation, worked off this pretty extreme overbought condition, did diverge, it corrected. I didn't do the fibs, but grinding down here, you certainly know where you could put a stop that could be pretty tight. It could be about a 40, 50 pip stop to see if we could get a continuation move, and that would probably start over 85. What do you think?
Yeah, well, I missed it twice at the 85.20 level, and then I said I'm going to leave it alone because it looks like it's heading lower. It crept lower. 84.80 was my low point in terms of of the support. I've got a zone.
Well, you better
84.80.
clean it up. You were off by 2
Exactly.
pips.
But when did that happen? 3 o'clock in the bloody morning.
Okay, so do you have limit orders in there, and then
No, I'm
okay.
reluctant to leave orders in anything overnight these days.
Okay.
So anyway, it tested it, it held, it's bounced, it's back above 85. It's trying to hold above 85. If it does that, then it's got every chance of having a little mooch higher. But a quick return under 85, and that might spell a bit of trouble.
Yeah, it would. Anyway, that's something I noticed. What about going over to K and talking about the fact this 142 level was big on the way down.
Yep.
It was pretty big on the way up, and held it a couple touches. Are we going to just run from here or continue to grind sideways?
Well, okay. Good morning, Dale. Good morning,
Good
everybody.
morning.
Yeah, again, a couple of things to note. Well, first of all, yeah, we had the level and it bounces from it. Tomorrow we have, well, tomorrow for us to later today we have the Bank of Japan expected to hold rates. In the meantime, Ishiba already reiterated that they purely and simply want the US tariffs to disappear. So that is perhaps a bit of a harder stance than the US may want. Then we have this little feat of the US GDP and month end. I think if over the course of the next let's say 15 or so hours, we get a retest of 142. I think a lot of people will hope for that, me included, to give it a try long, I guess. Yeah,
It's a tough
this could
call,
be
huh?
this could really do a runner if all pieces of the puzzle fall into place for a slightly higher dollar and especially the yen remaining on the defensive. Yeah,
Yeah,
it could do a runner if we start to break above that 144. It could really
go-
go for a big one.
46. And that's a
Yeah, it could.
count too. I mean, we rallied from 40 to 44. That's 400 pips. 400 pips from 42 gets you there.
Yeah, and I'm also looking at those crosses, which are holding up relatively well. Those yen
Yeah,
pairs, the
yeah.
crosses are doing okay. Yeah. Now, obviously, we could have complete opposite. We have a big miss on the GDP. We've got dollar sellers on the London fix, and tomorrow we get a surprise hike, and then you're trading 140, obviously. So, but
Yeah.
yeah, I think yeah, and actually the majority of the people in our room as well are kind of looking at the similar picture. So there's always more in several brains than there is in one. If we all see the same thing, there must be something there, right?
What are you seeing in silver?
Um, I think we are, and we've been talking about it over the flow show as well. I think we are in rebalancing mode in the metals. I just want to reiterate that also the metals have month-end stuff. There are over the turn. You do. I think we are in rebalancing mode, and we have seen that in a lot of instruments. We are seeing the opposite of what we have seen the first 3 weeks of April. Um, and I think this could potentially go a little further. I think we are in rebalancing mode there, and we could actually break or I don't know, but yeah, go and have a look under 32 bucks, and then I will see where we end up because I haven't given up on this thing going higher.
I was thinking 30. Probably
Yeah, we
pull back
could.
around 30 and a half, 30.
And it's silver. It's not a huge market, huh? If somebody needs to do a decent rebalancing, it could do another buck or so before the day is over.
You have any levels to pay attention to in gold? Obviously, this one
That little
that's
uh, that
holding.
little red that little red circle there to your left, that is where I'm going to get interested. 31 and a half.
Oh, I forgot I put that circles there. Okay.
Yeah.
All right. Yeah, the back at breakout kind of was a
Yeah, back
breakout
at
area,
breakout
right?
level. Yeah, yeah, yeah.
Okay, write these numbers down, guys, out there, because that could be a nice, you know, entry for at least a bounce. Anyone know, like, this is a big move in copper. 5%? Uh,
Huge,
yeah, well,
huge.
do you
Yeah,
know what's behind it, Blake?
Yeah, it was my trade setup from the trade off last week. Of course it was going to fall. No, I don't.
Okay,
No, I
I
don't
know
know.
that
I
you,
know
yeah,
I'm joking,
yeah,
but I'm not joking, but I'm joking. I mean, it was my
yeah,
setup, but no, I don't know why it fell. Maybe these guys have a better idea of why it got the crap kicked out of it overnight.
yeah, because compared to gold and silver, it's down twice as hard.
Yeah,
I
I
don't know.
you
I would
know
think maybe it would have,
I
China.
know. China PMIs last night. They came in
Okay,
worse than expected. They came in at 49. So
yeah,
contraction on
okay,
manufacturing PMI. So that's probably it, actually.
okay. Canada, comatose. Are we going to make a third drive? Take out these lows first. If we do, we'll diverge. And this is what I'm talking about. This is one confirmed, two diverging, and say we take this out by 30, 40 pips, I think we'll be well above this reading. So, we could rally back to 40, 41 if we get going over 39. Um, your take on the commodity currencies, Blake?
The Aussie's showing another failure above 64 cents, even after a pretty hot, well, hotter than expected CPI. I was talking about this in the Forex Analytics chat room just about an hour ago. Like the dollar Canadian is just, I'm surprised how little reaction we've had following the Canadian
Election.
elections.
Yeah.
I was really surprised. I actually played it on the long side yesterday. I want to say like maybe twice over the last 48 hours, with obviously limited success because it just isn't moving. But I had expected that the dollar CAD would have had some sort of recovery, would have seen some Canadian weakness on the heels of Carney, limited government, but or minority government, excuse me. But yeah, it hasn't really moved a whole lot. I don't know what to do. I think we probably just have to wait for the market to pull us out of this. You can see how it's a triangle. We're building the apex of the triangle right now. So I mean, a breakout is imminent. Might actually be. Ooh, in 5 minutes we have ADP data, plus we have Grega here too.
Buddy.
So
I didn't know.
Yeah, I forgot he's popping in today.
Grega, grab the screen then and take it away.
And Grega, we'll rattle off the data when it comes out here in a few minutes.
Yeah, sure.
Yeah, I still don't, Raj, I don't think we're going to 26 anymore. I'm buying it in the 30 range. I think that low was the low.
The
at
low
28, whatever. Someone's asking me. I was looking for $26 silver, and that's off the table since the gold silver ratio is starting to turn.
Yeah, I mean, since you mentioned silver, we had basically in from Elliott Wave ICE, we have a very beautiful price action actually. That was a free wave counter trend movement, right? So we know that that's probably a correction, a post that sooner or later should take us higher. But continuation patterns should then be made by 5 waves. And if you look closely here on this rise from that 28 area, then we can clearly count 5 waves up. So I just think that we have a very beautiful pullback right now. And I think that it's worth to wait maybe at least for the 38.2%, because whenever I'm looking at the higher degree wave 2 retracement, that's my minimum objective. So I think the 31, 70 could be very interesting support, and maybe we get some reversals. Of course, GDP data today could maybe shake the markets a bit, especially if there would be missed expectations. Then maybe
I've seen an even more bullish count that what you have labeled as C
here
was
wave 4.
No, that this pullback was 2, and we're in 3.
Okay, I mean, anything is possible in this market.
Yeah. Okay.
As you know, I always try to focus on more realistic near-term targets rather than trying to hold silver from here going straight towards, I don't know, $50.
Well, it's just a different labeling. Instead of the new high being 5, it'd be like completing 1 up,
but
then we get a 2.
Yeah, but I would not be surprised that there would be a lot of optimism going on if we see 36, 37.
Oh, yeah.
Everyone will start screaming for 40 and even higher targets, something similar that we have seen the sentiment here in the past. And that's when I would be very careful, basically. So I think that if anyone is interested in silver right now, as long as we are holding here above the 2050, it makes sense to expect at least 1 more high, and then let's see how it plays out at these levels.
Where are you at on bonds and rates, Grega?
I mean, we know that correlation got broken, as you can see here, obviously. But what I see right now here is that we are at a very important resistance. I don't think that we will see any kind of a move out of this range yet, but there's the 61.8% on treasuries, potentially with 3 waves up. But even if we see here move to the downside and the US yields will see some pop up, it doesn't necessarily mean that dollar will also rally because of this broken correlation. Maybe this will come back together if after some GDP data, but of course, when it comes to technical picture itself, it's definitely a very important level here. So we will see maybe some kind of a reversal.
Okay,
But
so
for
it's
me,
ABC. If we're topping out here, this is big B, and we get
Oh,
a
hey,
C down.
I'm sorry, we had a
62K.
miss. 62,000 miss.
Miss.
Yeah, Euro's ripping here.
Yields are probably dropping too.
I would
Right.
assume, yeah.
Okay.
okay,
Sorry.
So
Willie,
carry on. Carry on.
okay, or Blake, if you want to take the screen, let me know.
No, I mean
No.
I mean we got a 10 pip pop in the euro. Go ahead. It's not
Yeah, I mean,
That's that tells you how compressed volatility is. When Blake Morrow says that the euro's ripping and it's up 10 pips.
right.
What do you think, guys? I mean, does it say
yeah,
we're in quiet conditions or what? What do you read into it? I mean, it is compressed volatility in the last few weeks. You look at Canada, you look at euro. Yeah, what do you think's behind it?
Surprisingly, volatility is still high in the options market.
What, but not in the underlying asset.
No,
I mean, look at the chart. Yeah, compressing loonie and euro. Yeah. Okay,
longer we stay in these tight ranges, more volatile will be the breakouts.
yeah.
Maybe we'll have to wait till Friday, if not GDP provides some moves. But
NFP.
when it comes to price action itself, I mean, still looking at this 112 to be a major support for this fourth wave retracement. And I think that we have seen a pretty nice reversal. We talked about this, I think I was here last Thursday. Basically, we are still in this wave B rally. So for now, even if we pop up a little bit further here, I just think that there can still be some limited upside. Also, we have holiday in the Europe tomorrow, so maybe this range is still resume. So that's why I think that even if we see some kind of an intraday spike higher, it could be reversed maybe later in the next few sessions.
Could I see your big picture, please, in bonds? Because I'm looking at this TLT and it's been sideways. I'm sure the bonds have too for such a long time. So are we going to take out the lows in bonds, or we've bottomed?
When I look at this price chart here, I just think that we bottomed here in January and that we'll just now maybe consolidate a little bit further before we see further continuation higher. I just think that overall the US yields will be headed to the downside. And of course, if they will move on rates, maybe this will this thing will start accelerating lower. But as I said, maybe we're still in the middle of this current consolidation here.
And S&Ps, Grega, I know some people have this rally as a 2. Some people have it as a 4. Both of them imply new lows, and the other count was the low at 4,800, and we're going to new highs.
I mean, for me, the important is that we are still holding this support, this trend line support, and we could just basically stay sideways for few more weeks, basically. But why I'm not expecting straight movement to a new high here, why we should be very careful is, as I said already last time, is that we have some overlapping recovery here. It's not really impulsive. So unfortunately, we are trapped in very big ranges, which may not resolve that easily. But when you look here at the cash market, okay, what I would be observing is try to focus on gaps. That's basically goes back to Liberation Day on April 2nd. This one definitely should be a very, very important one. And would be much easier to play on the long side if this gap is unfilled, while in the meantime, we maybe see this wave B retracement. Then I still think that there can be opportunity to join maybe on some intraday trades within this recovery, which, by the way, is still underway. But we have the GDP. Everyone expects that maybe sooner or later the data will show that US is in a recession, but maybe that's not the real GDP that we should maybe focus on. I think that for the second quarter would be much more important because, of course, Trump started trade wars on April and those announcements regarding tariffs. So maybe this will be will have much more important impact on the markets.
Okay. Blake, you want to ask Grega some questions or something you
Yeah.
want to?
Yeah,
Let's
yeah.
look.
Well, Grega, real quick, can you pull up the dollar really fast? And right now, I mean, the dollar looks like it's poised to recover. I mean, if it gets above 100, but are you real sure about your wave count here? Your four? How about if that? Do you have an alternate count? And just in case the dollar just continues to crap. I mean, the euro is really becoming more of a. It's interesting. I think the euro
Safe
is
haven
becoming.
currency.
It is, and you clearly see it. You know, I'm playing long the Euro Aussie. I have been like literally the last few weeks to the long side, and you can see how it's just outperforming as stocks go down. And right now, like you know, Nasdaq futures just hit fresh lows. We're starting to see the markets roll over, and the euro's catching a bid. So, I guess
So
the point I'm trying to make is if stocks continue to move lower and the dollar moves lower, do you have an alternative count there?
Well, it's very, I mean, there are definitely different interpretations. We could basically see wave four in a different formation, not only a simple ABC structure that will take us a bit higher. We can basically stay sideways for a bit longer, even if we retest the lows here. But the idea is that if I'm tracking this wave four of the same degree like this wave two, which was quite sharp, then I'm expecting wave four to be a bit more, if not deeper in price, at least more to the right in time. So I still think that labeling wave four to be ended here, it's not really in the nice proportion compared to the same degree. So of course, we can basically adjust the wave counts over and over again. But what I'm trying to say here is that we are in a consolidation. And of course, if we see 100 or 101 level, I just still think that that's the perfect area to join the weakness here. But chasing the markets based on the wave structure right now here, at least for my taste, it's not the price action I would be chasing here on the short side.
I get what you're saying, but you can't rule out. I mean, we can't rule out like another fresh low in the
Of
dollar
course
at this
not.
point. Yeah.
Of course
Okay.
not.
Yeah, I'm just wondering how it might reshape your views. Brand just mentioned that the 10-year yields are going down here, and we just broke below the 618 retracement in the 10-year. Just FYI, as Dale pointed out, you know, after that data, yields are probably weaker. They are, and now you're seeing a fresh low on the yields. Greg, anything else that you wanted to
Yeah, I
point
mean,
out real quick before we?
yeah, since you mentioned the dollar, I mean, I'm looking at the emerging markets. Despite everything what's going on, they have made a pretty nice, interesting rebound here. And we know that this is a perfect correlation with the dollar that is weakening. And this makes me think that, of course, dollar should stay bearish. And that's why I think that even if we get some kind of a higher corrective rally here on the dollar, I think it's worth to observe for more weakness, especially while we have this thing pointing for more upside on the emerging markets.
Right, and you know, I'm big advocate of buying Mexican pesos. I think the Mexican peso is, you know, it's really it's going to be trading around 18 sometime this year. We're going to trade much lower in the dollar mex, which would confirm basically what you're saying with the EEM. So I'm a real big fan of what you're seeing there.
Yeah, I
What you're
mean
showing
on
there.
dollar Mexican peso, since you mentioned, I think that's a pretty nice resistance area up there. If we can move into this zone for a fourth wave around 1970, we also had these previous lows as well. So that's a pretty nice zone if we see any kind of a pop up here, or unless we start breaking down from a triangle.
Awesome. Thank you for that view. Grega, I'm gonna just real quick, if you guys don't know this, here, let me just grab the screens over here. So, you know, we cover on Forex Analytics, we cover 30 different instruments. It's everybody thinks it's because our name's Forex Analytics. That's all we cover. That's not true. We have, you know, crude, you can see crude, gold, boons, we have the DAX, the 10-year, you know, Ethereum, you know, Bitcoin, obviously. So, you know, if you want to get Grega's daily views, obviously he has his Elliott Wave service going on too, but you can have it included here with Forex Analytics, and you can get his views right here, and just click the button where it says Elliott Wave. So thank you, Grega. Thanks for being here today. We really appreciate you, and you know, he's been part of the team since we about Dale, wouldn't say since we started, but it was actually, was it when we actually launched?
He was here before me. You guys were
Yeah,
doing beta tests on it.
yeah.
Yeah,
Ah.
he's an original.
Dale, you have a sponge brain. You know, I know you know that, but man, it's crazy. You like literally have a sponge brain. Like I forget
Right.
shit from like yesterday, so it's amazing.
Well, thanks.
So,
Thanks. What's your name again?
just, yeah, Barry. Anyway,
All right.
hey, so thanks, Grega, for your inputs. I wanna hear from Ryan really quick. Ryan, you're putting out a bunch of crap. No, I say a bunch of crap. You're putting out a bunch of
Really?
information on Twitter. It's not crap on Twitter about jobs. So, what's your interpretation of what we just saw with the ADP data that came out, and how do we factor in these government job losses? When is it going to hit the market? And what are you thinking right now?
Well, the ADP doesn't contain the government job stuff, so
Right, it's private.
altogether, it's a weakening report. Okay, people call out the ADP in terms of accuracy or whatever. That's fine. For me, it is following what we've seen in all the survey data, PMIs, employment components, jolts of late. It's all indicating that there's a potential slowdown happening in the jobs market. Fed heads have said it. They see slow hiring, not firing. And so this is potentially part and parcel. But you know what the market says, here we go. This is it. This is when the data's turning. And so we're going to get very bearish over the NFP for Friday.
Okay, now, so obviously we're going to have, you know, expectations are going to come down a little bit, but, you know, I was listening to a couple, I want to say it was the Goldman economists. I was just reading something earlier this morning at the 3 o'clock hour that some economists were expecting not this month's number, but next month's numbers are the ones that are going to reflect it. But we've heard this, you know, we've heard this quite a bit over the last couple of months. So it'll be, I think the jobs report is going to be rather interesting. You know, one of the other conversations, and by the way, if you're not having these conversations in the Forex Analytics chat room, these are the talks that we have like literally all, I mean, I've been up for the last 2 hours now, and all of these conversations have been happening since I've been awake. So you can see going all the way back. This is just in the general chat room, and this is just since I said good morning, which would be somewhere around here. Yeah, good morning. And one of you know, some of the conversation we were having this morning about earnings, and earnings have come out and they haven't been horrible, but Michael Brown from Pepperstone, he mentioned this morning, you know, when we're in the chat room, he's like, I agree, but a lot of guidance downgrades, withdrawals. And yeah, there are a lot of, that's the one thing that's really important about this earnings season, the guidance and the lack of guidance. Like there are companies that are actually removing their guidance for the next quarter and moving forward. I mean, that's scary. You're going into this earnings season, which has basically been powering the equity markets for, you know, that's how, you know, investors price. And we are seeing guidance just being completely removed. And that's a little unnerving. And especially when we have huge stocks like we have Microsoft today, we have Meta, Qualcomm, we just got Caterpillar, which came in with, you know, below consensus earnings. You know, tomorrow we have Apple, Amazon, McDonald's. We have some Amgen. We have some pretty big heavy hitters coming in the next 48 hours. And you start, you know, putting blinders on the market where you're like, yep, sorry, we're not going to tell you how we feel about the next quarter and the following quarters. That's a little concerning, in my opinion. How do you feel about that, Dale? And like going into this next, let's call it 3 to 6 months blind. I mean, how do you feel about that?
Like I said at the beginning of the week, you know, I have some things I want to sell, but I'm not going to do it in front of your earnings. And it's my view that I have to try to sell this as a failing rally. 5,800 is a number that I've been considering. So that's still quite a bit higher. There's also that 5,700. So I'm looking at you know, even if we don't crash to new lows, that there could be at least a pullback there. But I think that there's a possibility that you see the RSI, if you pull up the RSI, Blake, at the lows in April. See, you can't even, it's hard to show it. It was so low. All right, see that confirmed low? That bothers me for a major rally to have staying power.
Yeah,
Because it
I hear
doesn't
what you're
have,
saying.
it would be a rare event. I've seen it happen, and then I'll sell all the way up because I had a confirmed low. You still have to,
Oh shit! I'm
price is
sorry.
king.
We
Go
just
ahead.
had the I'm sorry. I just forgot data was coming out. I'm
Oh,
sorry,
data.
Dale. Yeah,
That's all
Unexpected
right.
higher
we have
prices.
what? So
What do we get?
what? Nail down the data for us,
Right, so
Ryan.
GDP came in lower than expected at minus 0.3. PCE prices jumped though, 3.7 and 3.5 versus 3.1 expected in both the headline and the core. Good news on consumption though, that was up higher than expected, 1.8%. So yeah, it's GDP worse, but there's some other factors that don't make it as bad.
So with the GDP data, let me see what was what came out with PCE. So that what does prices show us? I'm sorry, we got caught up in conversation and totally forgot about all of this coming out. So oh, and the PCE comes out in about an hour and a half. Did
That's
they
that's
push
the
that
monthly.
back?
That's the monthly one. The quarterly estimated one for the GDP data.
Oh, it just came out.
PCE came in at 3.7 versus 3.1 expected, 2.3 prior. Core 3.5 versus 3.1 expected, 2.6 prior. So
Nice.
quite hot.
Can you say stagflation? I know that that's a term that's getting thrown around loosely, but stagflation is typically not good for equities. So, and you can see equities are absolutely peeling off points as we talk, as we discuss. And you know who's going to be here to peel off some S&P points? I believe is Katie Stockton. So is Katie here, Dale?
Yeah.
I'm here. Good morning,
Hey.
everyone.
One of my favorite technicians. So,
Thank
so
you.
I want to pass everything over to Dale Pinkert as he and Katie take you through the markets and how she's viewing the markets, and she'll talk about her ETF, which I think everybody should take note of. And I want to say thanks everybody for being here. We had a full house today, obviously with viewers, but also with all of our Forex Analytics folks. So thank you, Grega. K-Man, great to hear your voice. I'm expecting K-Man and Ryan to be around in the Forex Analytics chat room tonight for the Bank of Japan, right, guys?
Yeah. Sorry, you
Yes.
hooked me up.
Yes,
Okay,
it's going to
heads
be
or tails. Heads
it's
I
gonna-
win, tails you lose.
It's going to be a full house tonight in the Forex Analytics chat room for the Bank of Japan. I love it because this way it's not just me by myself. I'm not saying by myself, but I mean we usually have having the full team is great. So we'll see you guys later this evening. It's going to be a very busy day today, and volatility has been so tame over the last 2 days that now it's starting to break out. So that's what we were hoping for, and that is what we're getting. So Dale, it is all yours. There goes the VIX, and you and Katie have a great interview.
Thank you, Blake. Thank you, Ryan. Grega, thanks for dropping by. Thank you, K-Man, and welcome back, Katie. Great to hear your voice, Katie.
You as well.
So the big question, the $1 million question, the $1 billion question, it was 4,800 the low for quite some time, or is this a failing rally that we're going to take out that level? And should that happen, what kind of downside would there be?
I would say it's obviously proven to be a short-term low, if not maybe even an intermediate-term low, the early April low for the S&P 500. Right. However, I would suggest that it's probably not the final cycle low. And that's, hopefully you can see the screen here.
Yeah.
Highly related to the monthly gauges that we track. If you notice here in the bottom window, the monthly MACD has a brand new sell signal. And so that takes us back to about March of 22 as a fair comparison. And of course, it's not a positive comparison.
Right. And from a higher level.
Yeah, yeah, and we
Okay.
exactly. And we have also an overbought downturn that equates to the same period. So when we see that prolonged overbought, that is a reflection of the primary bull cycle, but now it's really lost its hold based on these metrics. So that would tell us at this low, while it's proven to be, a nice sort of short-term relief rally off of it, I think we've got a little bit more downside this year before we get to that final low. What I would like to at least see would be something better out of these monthly stochastics. Notice after 2022, they had to get oversold, but then also had
Right.
to see a retest. And it was the
They had to do
retest
some
that
work.
became, yeah, it's a process, as we all know.
Yes. So where's the bottom, the top of your cloud right there? What's that, about 4,000?
Yeah, that's about 4,000. It doesn't act as a magnet, and of course, it's a moving objective. So I'll
Right.
zoom in a little bit to show you what we're watching. So here's the weekly cloud model for the
Okay.
S&P 500. That would be a gauge of support. If you post consecutive weekly closes below, that's officially a bearish reversal in our work. You can see there's some former resistance from back here, right? From about 48.10, I would put it at from the
Oh
early
yeah, there was a
22 high.
breakout. Yeah.
Yeah, so there is a zone there. But when I think about downside objectives, I often go to the Fibonacci's, which I know you all know very well. And so what we had been watching in that regard is this one in part. And there are actually two 38.2% retracements that were focused on close to this one here. It's 51.33. And that, see how that aligned with the cloud at this point? So
It
that's
did.
definitely a key level, because below that, then this kind of 4,500 would be targeted as a 61.8% retracement. So we
A lot
feel
of
that,
people pointing towards that target using different methodologies. If
mhm,
we rally to 4,800 and we have equality to the downside, like the first break, it gives us 4,500.
that's right. So,
Yeah.
I mean, I wouldn't rule out 4,500 as part of this cycle. And you could imagine that that's where we could probably see those monthly stochastics become oversold. I'd also refer to the weekly stochastics, which, if you'd notice, we did get the oversold reading here,
Yeah.
but retests are super common. You saw it here, you saw it here, and it's usually that retest that is more of an important low. So we think that the relief rally will persist in the near term, but that it's pretty fragile.
Okay. We're the recent tests of TLT of 85.5, Katie, happened that week that Paul came out and said, I'll provide liquidity, or we
Mm-hmm.
will provide liquidity. There have been quite a few hits at 85 in TLT. Are we going to hold it and launch after moving sideways for 2 years?
Yeah, I mean, I think the sideways is what we want to respect because it is somewhat directionless. The
Right.
monthly chart you can see is just really range bound here.
Yeah, that's a
And
long time.
so yeah, it is a long time. I mean, it does show this sort of momentum shift, but that's actually kind of long in the tooth at this
Yeah.
point. So we have somewhat dueling influences where this point's higher and this is starting to fade. So we're just going to take away a neutral bias from the long-term indicators as long as that range is intact, and try to understand and leverage the short-term swings. As it came down, this is on the daily chart, to that support level, you'll see that there was a DeMark buy signal right there. And it was the first time in a long time that we saw that. This was our last DeMark buy signal. The implications are for a minimum of a 2-week relief rally, but it's often more of an intermediate term low that they designate. So we're trusting that there's more upside for TLT, more downside for yields, but that longer term, it's still a neutral takeaway. You can even just see the slope of that 200-day is super flat.
Yeah. Okay. I know that let's talk about what happened on Liberation Day. So, I used to judge or select CTAs not based upon who had the best performance, but what happened to them during a drawdown. So we had a 20% sell-off in the S&Ps.
Mm-hmm.
How did your ETF fare during that 20% general market sell-off?
Thankfully we outperformed. So here's the S&P 500, and you can see the drawdown is about, yeah, so 21%. That was from the Feb peak to
Right.
the April trough. And
Right.
TAC has limited drawdowns against the S&P in every environment that had a greater than 8% downdraft. And it's also beat its benchmark over that period as well. And it's those limited drawdowns that really contribute to long-term returns. As you know,
Right.
TAC was down about 15% from that same time frame. And it
Okay.
has, of course, recovered off of a nice DeMark buy signal. It's pretty remarkable when the DeMark buy signals work on active products, right? But they still do. And so we're proud of that performance. And of course, the ratio will show that it's reverse course alongside a lot of other products that are more conservative in their structure. TAC is a sector rotation fund at its core, but it does use asset allocation. And by default, it underweights technology, which it actually just recently kicked out. And therein overweights just about everything else, including the defensive sectors.
Okay. I know you generally hold a position in oil shares. Do you now? No one likes oil, Katie.
I know.
It's one of the most under-owned commodities out there.
Yeah, and we were watching this long-term triangle formation that's loading slowly here for the price of crude oil, and unfortunately, that it resolved to the downside. I would say that the breakdown that we saw in crude, it's pulling up here in a second. The breakdown supports downside follow through for the coming months. So if you see here, it's a pretty decisive breakdown. You could draw the support even farther back to the $65 to $67 per barrel area on WTI. So I think this is meaningful as a breakdown, and that's what we want to respect. As much as it might be under-owned, it seems like technically it's got its challenges, and it's almost treating this big triangle formation as a continuation pattern longer term, as opposed to a reversal pattern. So I want to respect that. TAC does not have a position right now in the energy sector, Spider.
What if we got back over 64? You know, we've had a lot of false breakdowns, false breakouts, where a market will take out a support level for a little while and then be back above it. I've been seeing it in
Dale,
throwovers.
Yeah, like a shakeout or something.
Yeah.
If the breakdown hadn't been confirmed, and for us, that's those 2 weekly closes below the support level, I would be more encouraged by that. But the fact that it's already confirmed and we have no DeMark indications of downside exhaustion, so as much as it is oversold by some metrics, like that recent oversold in the weekly stochastics, you see the DeMark indicators are really nowhere near flashing a counter trend signal. So I want to also respect that and just at least wait for what appears to be a catalyst for a bigger relief rally.
Okay, I know you followed the gold silver ratio. I've seen you talk about it on CNBC. We had that double top up there, 2 drives up around that 107, 110 level. You still believe in the trade of exchanging your gold for silver up here at this ratio?
So the ratio, let me see if I can find an example of it here. Bear with me. The ratio has actually broken out, and the breakout, as you'd imagine, does favor gold. Not necessarily in the very near term, but as I'm looking for it here, it does give the takeaway that gold is here to stay with its positive momentum and positive relative performance. Whereas silver, I would say that silver, showed that it was pretty high beta in relative terms during the downdraft. Here, I found it. Yeah, during the downdraft, the sort of pullback in silver to me was somewhat disconcerting. So if you see the gold silver ratio here, big breakout, it'll retreat there, and so maybe a pullback in gold versus silver, but that breakout's pretty meaningful in our work. And it negated any of these signs of exhaustion that we had. So we have shifted our bias on gold versus silver. And gold, in absolute terms, is poised to consolidate, and silver does have upside momentum. So I think if folks have that trade on right now, they can probably comfortably stay with that very near term. But I would look to exit that and ultimately reduce the silver exposure, because this was concerning. I think that this
Yeah.
downdraft, while very swift, it was pretty concerning.
Okay. So so that action down there actually, even though we've recovered, is bearish to you that we took out
Yeah,
20.
yeah, and I'll
Okay.
show you what it effectively prevented the momentum from really improving meaningfully. It also, I would say, suggested that we're not likely to see a breakout, right? A breakout above the highs, just north of 35. That to me
Okay.
is made less likely by the weakness that we saw.
Okay. And the dollar, please.
hmm So the dollar has been, of course, very interesting, and from a directional bias, of course, it is a downtrend or down cycle, and it
Yeah.
is pretty meaningful long term too. If you look at the monthly chart of the dollar index, we have a breakdown pending confirmation below the cloud-based support. So, and then at the same time, we had this 13 cell signal confirmed last month. So what looked like a breakout back in here from this range failed very quickly, and there's information in that. This was our last 13 cell signal. You can see it yielded a 9 buy signal ultimately, and right now we're only on a 2, so it would suggest that maybe for 7 months we could see this down cycle and the dollar keep hold. And it is somewhat in falling with just our thinking for this year into year end. What we've seen is a pickup in volatility in equities that we think will stay with them for most of the year, and perhaps also the downdraft in the dollar will stay with it. On a
Okay.
short-term basis, we do have some counter trend indications. So for
Yeah.
those who are positioned, here was a DeMark sell signal, here's a DeMark buy signal that's still active, and you can see the stochastics do support a relief rally.
Okay. It's kind of what we're looking at. So with what's happening in the dollar, Katie, the narrative of this is a secular shift away, repatriation to buying your domestic market. That means all the people that poured money into the U.S. are continuing to repatriate. That's your lower dollar. And then you have outperformance in things like emerging markets and even the DAX.
That's right.
What do you make out of it? And they say this doesn't happen often, but when it does, it has staying power. I think it was 20 years ago the last time we've had a shift like this.
Yeah, no, I do think it's meaningful, and you can see it in the ratios. This is it's got a lot of um, indicators on it, but hopefully you can see the ratio has really surged, right? And if you take that
Yeah.
within the longer term context, it reverses not only the cyclical downtrend, but also potentially a secular downtrend in German equities versus US. So I think it's a meaningful reversal in relative terms. That is overextended perhaps in the short term. So I think short term, the outperformance that we've seen year to date is overdone for at least European equities versus US. However, once we see a pullback in that ratio, that would be perhaps an opportunity to build relative exposure to international
Okay.
markets. And there's
Okay.
always spots of strength, right? Like on the country level, we've been more constructive on Brazil as one emerging market to take a look at. And a lot of them, of course, are tied to different commodities.
Okay. Anything I haven't thought of to pick your brain about today, Katie?
No, I mean, I would just say we're going to keep an eye on not only the S&P 500, but also the VIX. The VIX, as you know, spiked, and those spikes up to 60 or so,
Yeah.
that they are usually short-term lows, right? So people get excited about that. But they
Right.
also trigger like a more prolonged high volatility cycle or reflect that shift. So
Right.
we do think that we're in a higher volatility cycle that should stay with the market, and we'll be watching the VIX for market timing purposes as always, and also as a reflection of market sentiment. So as it comes
So
down, we'll be watching our indicators.
short stocks with VIX 20 and buy them at 60.
There is support around 20.
Yeah, there is.
Mm-hmm.
Yeah. So a great interview once again, Katie. Best way for people follow you and get your research and invest in your ETF, where should we send them?
I appreciate it, Dale. So I'd say fairleadstrategies.com has a contact form where people can sign up for a free trial of the research.
Okay.
And our ETF is available just about everywhere. And by all means, please reach out for more information. And there's a website, fairleadfunds.com, to refer to as well.
Well, much success going through these choppy waters, tariff storms, and who knows what else is ahead of
Thank
us.
you, Dale.
I really appreciate your view, and hope that you have a great quarter ahead, Katie.
Thanks. Same to you, Dale. Take care.
All right. So we'll talk in the summer.
Sounds good.
All right, Katie Stockton, everyone follow her on X at Stockton Katie. If you're not following Katie's technical work, you're missing out. So follow her, and I think she'll calm you down. For you nervous traders out there, Katie's demeanor can calm you down, even in a drawdown. So remember, don't just count your pips, count your blessings, and finding good people and getting good content and actionable ideas would be a blessing too, right? So have a great day, everyone. See you tomorrow. You could join the team in about 14 minutes on the morning edge, and that's a wrap. Everyone's thanking you, Katie. Appreciate your edifying our community today. Thank you.
Take care.
All right. So that's a wrap, everyone. Enjoy. Adios.